Weekends when the weather's good, I take my toddler out, and we always pass this ice cream truck. And, a 3.5-year-old sees an ice cream truck. The only way to get him to stop screaming about the ice cream truck is to tell him he's going to get an ice cream. Okay, so kids ice cream, like the smallest one they make, okay, in Brooklyn, how much do you think that costs?
Whoa, I'm going to go with $4.
Wow, you're close. $5.
$5 for a small.
For a small, which
for
to
a
me seems
soft
like
serve,
little soft serve and some sprinkles.
Yeah, worth it
Does
still, but not what it used to be.
By the way, you have to ask for extra napkins several times. they kind of skimp on the napkins.
How many times has he instantly dumped it on the sidewalk?
It's several, unfortunately, which only ends in tears. But the reason I bring this up is because among the most read on the Bloomberg terminal is a story about how food trucks here in the city are really under the double hit, not just of inflation, but also of remote work. So a lot of the food trucks in the city, Manhattan mostly, they're not seeing the same business that they were seeing years ago because the same number of people have not returned to the office.
Absolutely. This story is a really interesting read. More than 10,000 street vendors in New York City. It's amazing. I don't think people outside of the city realize how important food trucks and carts are to our way of life in this city.
What's your favorite?
There's a place on Madison, a Greek place that did like the tzatziki chicken or tzatziki. How do you say it?
Yeah, I think that's right.
Greek sauce on the chicken. That was my favorite.
Waiting
I'm
for
not sure
someone
if he's
to
still
correct
there.
me in my ear. All right, we're seeing nods in the control room. That's a good sign.
I got it right. But hopefully he's still around. I know our local guy on the corner isn't here anymore, unfortunately. But
and that's been a big issue.
Yeah.
And we saw in the early part of the pandemic, and in fact, you saw some banks rallying to raise money for the folks who were essentially losing their livelihoods because people were working remotely, so they weren't coming back. This story, very interesting one on the Bloomberg terminal. Be sure to check it out. It's about the more than 10,000 street vendors in New York City, talking about competition, inflation, and fewer office workers, and how difficult it's been for food trucks. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have a rally underway in the equity market. We are on course to snap a 3-week losing streak near session highs right now, with the S&P 500 up about 1.5%. The advance is being led by energy stocks along with communication services shares. Information tech also a part of this rally. Earlier today, we had several hawkish comments from a number of Fed officials. The head of the St. Louis Fed, Jim Bullard, was saying he is now more supportive of a 75 basis point rate hike later this month. Chicago Fed's Charlie Evans also said he is open to another jumbo hike. And the head of the Kansas City Fed, Esther George, was saying the Fed has a clear-cut case for continuing to remove monetary support. In the bond market right now, look at the short end of the yield curve. A 2-year Treasury up nearly 6 basis points now at 3.56%. Very little movement on the longer end, with a 10-year Treasury now at 3.31. Markets, I think it's fair to say, are braced for another 75 basis point rate hike on September 21st. The question is one of over-tightening and whether the Fed will be forced to cut rates early next year. That may speak to some of the weakness that we are seeing in the dollar today, with the Bloomberg Dollar Spot Index down about 0.6%. Dollar weakness really underpinning the equity market rally. As I mentioned, S&P 500 up about 1.5%. Look at the semiconductor stocks doing well today. We have this Philadelphia Semiconductor Index up more than 2%. Late yesterday, Susquehanna Financial reported chip delivery times shrank in the month of August. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Tim Stenevec and Michael Regan in for Carol Master this afternoon. It's Bloomberg Business Week. Now, if you followed the story of WeWork at all, then you definitely know the name Adam Neumann. During his time as CEO of the company, Neumann faced allegations of excessive spending, conflicts of interest, and grandiose eccentricity. After a failed attempt at an IPO, he left the company, which dropped from a private valuation of $47 billion to a public trading price today of about $3 billion. For Bloomberg Business Week, Hannah Miller and Ellen Hewitt write all about Adam Neumann's return to real estate and how it has a crypto twist. You can read the story now on the Bloomberg Terminal and at Bloomberg.com. Very lucky this afternoon to have Hannah Miller joining us. She's digital currencies and venture capital reporter for Bloomberg News. She's in our 960 studio in San Francisco. Hannah, I want to start with what exactly Adam Neumann has built here, and the name, because the word flow is, well, one of his favorites.
Yes, no, we are getting more details about what Adam Neumann is doing with Flow, which is this new real estate startup. And it has a bit of a crypto twist. Right now, there are plans to create a digital financial services wallet that would give holders the opportunity to interact with cryptocurrencies. And yes, Flow is his new favorite word. He has another startup that he helped found called Flow Carbon that uses blockchain to track carbon credits.
Hannah, I love the final quote in your story, the kicker, as we call it in journalism, from Miko Matsumura, who's with a crypto venture capital firm. And the quote is, Tim, if you're in the venture capital business, you can't actually back normal people. That's bad news for you, Tim. I think I still got a chance.
Oh, and that's a compliment, because you're saying I'm a normal person.
Exactly. But no venture capital for you, but I think I still got a crack at it. But Hannah, I'm curious, given Neumann's track record and this sort of debacle of WeWork trying to go public, what is it about this guy that makes a venture capital firm say, this is the guy, we want to give him $300 million to do something with?
Yeah, I mean, it might seem to go against common sense. Why would you give this person a huge check after what happened with WeWork? But he is a big personality with a lot of ideas, and people see him as an innovative entrepreneur. He built WeWork to a huge national level. Everyone knows the name. And I think crypto venture capitalists are excited to see what he could do in this industry. We've seen some struggles here as of late with crypto winter, and VCs are actually pulling back to a certain degree. So for some, this is a bright spot. They see a big name coming in with a big check. They know capital is still flowing into the industry. And
it's not just a random venture capital firm backing him. We're talking Andreessen Horowitz here, Hannah. For anyone who knows anything about VC and Sandhill Road. Andreessen Horowitz, absolutely a huge name. I think a lot of people were surprised to see the backing there. Can you talk at all about, though, Andreessen Horowitz and their interest in crypto?
Yeah, A16Z is one of the biggest crypto investors. They have a massive crypto team. They've backed some of the biggest names in the business. I'm thinking here Coinbase and OpenSea. And the fact that they're giving a huge stamp of approval to Adam Neumann's startup is a big deal. Mark Andreessen actually personally wrote a blog post talking about why they invested in Flow, and he talked about how community was a big focus with Neumann's startup, and that was part of why they were drawn to it. And we've seen crypto foster massive community. People are always talking about it on Twitter. It has a lot of supporters. So I think they're excited to see what Adam Neumann can do with crypto to help build community within real estate.
One really interesting element of the story, Hannah, is you mentioned how Neumann grew up on kibbutz, basically a commune in Israel, and how that sort of sense of community has inspired a lot of his work. Can you talk to us a little bit about how community and the sense of community fits into this investment?
Yeah, so they're thinking here that there could be a blockchain-based crypto rewards program. We don't know what that looks like yet, and I believe plans can change with this. So it's still a bit up in the air. But they're looking at a way to kind of foster community, get people more connected with whatever they're renting, whoever they're renting from, what they're renting. We do know right now that there are no plans to tokenize real estate ownership or rentals, where you would use a crypto token to represent ownership. So with that in mind, things could change, but right now they see this as a way to kind of get people excited about, living in these communities that Neumann is building.
Hannah, can you, and forgive me because I would say that I'm a healthy skeptic when it comes to this stuff, but will you help me and help our audience understand the utility with blockchain-based systems such as this when it comes to, because I think a lot of people in Silicon Valley, they get criticized for essentially trying to solve problems that don't exist. So what is the problem that ostensibly this is trying to solve?
Yeah, no, I know I've talked with sources within the real estate industry. Disconnect between renters and their landlords. There's a lot of frustration.
Disconnect is one word to describe it. Anger and fury, I think, yeah, the others. Sorry,
resentment,
continue.
Of course, yeah. No, so I think they're trying to find a more seamless way to have these relationships. Blockchain is really touted for its transparency, for making it easy for people to interact with digital currencies. And I think they want to kind of take some of the pain out of that relationship between, renters and their management company, their landlord, whoever. So yes, I know there is a lot of skepticism, and, we see that really justified with hacks and scams that rock the industry every other week, it seems. But there are still people holding on to faith that this industry will be world-changing.
Hannah, we only have about 30 seconds left, but I'm wondering, is this really a sign that venture capital industry has yet to give up on crypto, or is this an anomaly, do you think?
No, I think it shows that people are still very steadfast, that VCs are still invested in the industry. From what I've been hearing, people believe this winter will pass, that this is part of a cycle, and that we are still exploring permanent long-term use cases for blockchain and crypto.
Bitcoin's certainly having a good day today. It's having its best day in months, up, 9%. A big thank you to Hannah Miller, digital currencies and venture capital reporter for Bloomberg News. Check out her story about Adam Neumann, his return to real estate with a crypto angle on Bloomberg.com.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading day, your trading week. Caroline Hyde, Romaine Bostick, Taylor Riggs. We're joined now by our colleagues Tim Stenovic, Mike Regan, and we welcome across, of course, our audiences, TV, radio, YouTube. A day to dissect what is another day of gains at 1.5% and more than 2% on the week, Tim.
Yeah, and it's not just the equity market where we're seeing gains. If you type in CRYP Go on the Bloomberg terminal, you can bring up some cryptocurrencies, quite a few of them on that screen. Every single one of them is in the green. Bitcoin at the top, up more than 9% today. Mike, it's actually having its best day since June 19th when it rose more than 15%. I was looking at that and I said, wait a second, I don't remember that. It turns out that was a Sunday.
Yeah, who likes to watch their portfolio on a Sunday? But Tim, I'm going to talk about that old-fashioned currency, the U.S. dollar, down about 0.6%, according to the Bloomberg Dollar Spot Index. The was down as much as 1%, just a few days after hitting that record high. Got the Australian dollar, Norwegian krone, Swiss franc, Japanese yen, all up about 1% or so. So perhaps it's just a delayed reaction to the ECB raising interest rates by 0.75%, and the Bank of Canada doing the same this week. Caroline, maybe the rest of the central banks catching up with the Fed is finally cracking this dollar rally that we've saw this year.
Well, on the day, at least for now, we'll keep an eye, and certainly that dollar weakness, I think, is really what's underpinning a lot of these gains in the stock market. S&P up 1.5% on the day. We're above 4,000. 4,069 is where we trade. The Dow also up 1.3%. We're up 421 points. The Nasdaq putting in a gain of more than 2% at the moment, and the Russell 2000 also on the higher side. Taylor, it really has been a pretty good shortened week.
And breadth has been getting better. 2 hours ago, 45 stocks in the S&P 500 were in the red. That number is down to just 27. There's no better way to show on the terminal the breadth of this rally than the IMAP function, one of our favorites. Every single sector in the green, and within every sector, at least 90% of those stocks are also in the green. Romaine, you gonna give me breadth today?
Well, 474 stocks in the S&P are in the green. There are a few to the downside, including Enphase Energy. That's actually your biggest decliner on a percent basis in the S&P 500 today, down about 4%. Meanwhile, of course, one of the biggest weights out there, Apple doing its part, up about 1.8% here on the day. And as I just double-checked this is going to actually be the first weekly gain that we've had for Apple after 3 previous weeks where it declined, a 10% slide over that time period. Cigna at 293.44. That is a record high here, assuming it holds that, up 0.9% here on the day. And keep an eye on Twitter, only up about 0.4%, 42.01. That's the price on your screen. Big shareholder meeting coming up Tuesday of next week, where they finally get to have that formal vote on whether they force Sir Elon Musk to move forward with that $44 billion acquisition.
Really knight him on the
I was going to say, I didn't know he got knighted.
He likes to put himself.
Well, things are in disarray right now. I do everything.
Meanwhile, let's have a little look at what's happening on the S&P at the moment, up 3.6% on the week. Now, remember, it was a shortened week, but we had a mega rally on, of course, the Wednesday. Tuesday was a bit of a lackluster day, but then we just came back 1.8% higher on the Tuesday, and of course, we're putting another 1.5% today. That means we've had the best week since July the 29th, but really the first time in 4 we see gains across all 4 major benchmarks, Tim.
Perhaps it's because we're really starting to understand what the Fed is going to do, at least in the meeting coming up in September. Now, maybe we're starting to think about November. In any case, we're trying to understand what the Fed is going to do. And earlier today, former New York Fed President Bill Dudley weighed in an interview on a Bloomberg TV. He said the Fed will not make the same mistakes that it previously made. Check out what he had to say.
Once the reserves in the system get to a significantly lower level, the Fed's going to slow the rate of asset runoff, and then it's going to stop. It's basically going to stop. It's going to stop before they think we're at that critical point where reserves are too scarce. So they're going to learn from past experience, and I don't think they're going to make the same mistakes this time.
That was Bloomberg Opinion columnist and senior advisor to Bloomberg Economics, Bill Dudley, said the Federal Reserve not making the same mistakes that it previously made. Romaine, what do you make of it?
Well, I mean, that's his opinion. I think the market's opinion is a little bit different on that. I do think it's interesting that you have actually seen some economist estimates for inflation start to come down only slightly here. I mean, the latest Bloomberg survey, I think, had it down by like, 0.1 percentage point or 0.2. But the idea here that you're now getting not only expectations out there in the market, but you're actually getting, I guess, in theory, I guess the smarter people in the room really starting to say that maybe this is working, whether it's the Fed's doing or whether it's just the economic cycle, that remains to be seen.
Dan Swank, of course, on earlier of KPMG, chief U.S. economist, saying, look perhaps for a really soft CPI print next week, and the negative numbers coming in, but that doesn't mean that the Fed needs to be moved off course at this particular time. It just shows that some of the medicine perhaps is working. And at least, though, on the day, that's financial conditions don't seem to be tightening all that much on this Friday, Taylor.
Well, can I just point out on that working part? I mean, because we know that we're decelerating on that headline number. I mean, the expectation is that core CPI is actually going to reaccelerate back above 6%. So there's still some concern here about what's going up and what's going down.
Well said, Mike. Just quickly, year over year, Ellen Zentner comes out. It's gone from 5.9 to what she's thinking is 6.1. Her forecast that she's moved higher now.
For core, yeah.
Yeah, I'm going to go back and read this note. They're looking at some food prices there and as well actually increasing on a month-over-month basis. So, yeah, I mean, there's a lot to digest within these numbers.
And certainly we heard from
James. Have you seen what butter prices are doing, Mike?
What prices?
Butter. It's up like 12%.
No, I haven't.
That's why
seen
Kroger
that.
posted those blowout earnings.
It's all about butter,
Yeah.
flour.
We were talking
bacon.
about ice cream prices. There's a
Oil.
great article on the Bloomberg about inflation hitting food trucks.
Oh,
And
ice cream guys and girls. I mean, it gets costly because they have to
$5
leave their vans running all the time while they're serving you your soft serve.
$5.
And cones are really expensive. Sprinkles, too.
Yeah.
Cones?
$5, Taylor.
how much butter do you consume, Romaine? I'm off the stuff.
Well, enough to be concerned about my budget. How about that?
I'm still thinking Romaine's going to be eating food that's made in a petri dish in about 10 years. So we'll see how that
Real
works
things.
out.
Eat real plants. No petri dishes or anything. In all seriousness, though, when we talk about sort of the inflation picture and everyone's sort of trying to sort of game whether we've hit that peak, whether the Fed has actually sort of made inroads here, it's still going to be a few months before we really know the answer to that.
And I think, well, the break-evens have been rolling over. The market has been starting to see the whites of the eyes of inflation rolling lower a little bit. I suppose the question continues to be, what about some sort of ephemeral soft landing, if ever we can achieve that? And if the labor market really does have to contract hard. And in that binary moment, do we therefore see the S&P back at 3,000 if recession does hit?
What
Why
happens?
do we need to land? Can't we just keep the plane in the air? Is that not how?
You got to land at some point.
Huey Infinity.
I
Just
mean,
keep
we
it
haven't
going.
landed it for 10.5 years.
Yeah, inflation, though, next week set to come in at 8%. Hey, Taylor, I don't even know if you knew, but we are talking to someone next week on Bloomberg Radio about lab-grown meat. So,
Wow.
yeah.
Which one? There are a few.
Wonderful.
All right, so we'll see. I don't know if they're going to bring samples. I'm interested. Never tried this stuff, but maybe, we'll be eating that in a few years.
I'll come on over to radio if
So
you
you
want.
do you do wine on a Friday and then petri dishes on like a Tuesday?
Exactly.
What's it made out of, Tim?
Cells?
Cells. They grow cells
yeah.
from real
And
meat.
petri
Who sells?
dishes.
I'll tell you after the interview. How's that?
It's
All
people.
right. We got to go, but we're going to be back together for our Beyond the Bell coverage at the market close. This is the countdown to the close here on Bloomberg TV. Don't miss it, though. 3:58, our Beyond the Bell coverage continues. Bloomberg TV, Bloomberg Radio, and YouTube.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Mike Regan in for Carol Master this afternoon. We kind of stopped talking about a soft landing. We're talking about something else now.
Yeah, some kind of landing. I like Romaine's joke about why can't we just keep the plane in the air? But I don't know. It's a soft land. It just seemed like such a far-fetched idea to a lot of people. But you look at that forecast for CPI next week. If we do have a surprise on the downside, I think we're going to be hearing a lot more about the soft landing possibly.
Yeah, a survey of economists by Bloomberg that's clocking in the CPI year over year. The estimate is at 8% right now. That is a healthy number. I mean, that's far cry from 2.
Yeah, but down from over 9, and on month-over-month basis, actually looking like it'll go lower. So get a few monthly strings of that, and who knows?
And we'll have to look under the hood too, because to what extent is it tied to energy prices coming down, and that's why it's important for us to look at the core as
Absolutely,
well.
yeah. That rent component to me is the most important thing. I think there's a lot of
We talked a lot
indications
about
that will not really cool down as quickly as, say, gasoline, that sort of thing does.
Yeah, a lot of people getting that news from their landlords that they're raising the rent this year. Let's get to world and national news in Washington, D.C. now with Nancy Lyons. Hey, Nance.
Thanks, Tim. King Charles III, in giving his first address to the United Kingdom as the nation's new monarch, is vowing to continue his mother's legacy of service.
Queen Elizabeth was a life well lived, a promise with destiny kept, and she is mourned most deeply in her passing. That promise of lifelong service I renew to all today.
King Charles also expressed his love for Princes William and Harry. He also wished Prince Harry and Meghan Markle well as they, quote, build their lives overseas. President Biden says we need more semiconductor chip plants like the one that's being built by Intel in Columbus, Ohio. Biden spoke during today's groundbreaking for the facility.
The president said thanks to the bill Congress passed to support domestic chip manufacturing, Intel is one of a number of semiconductor firms that have announced expansion plans in this country.
Made in Ohio and made in America is no longer just a slogan. It's happening. Industry leaders are choosing us, the United States, because they see America's back and America's leading the way.
The president said the workers who build many of the new facilities will be paid union wages. In Washington, Irv Champman, Bloomberg Radio.
Sunday marks the 21st anniversary of 9/11. The National September 11th Memorial and Museum in New York City will be holding a commemoration ceremony. The event will honor the 2,983 men, women, and children killed in the attacks at the World Trade Center site, the Pentagon aboard Flight 93, as well as those killed in the 1993 World Trade Center bombing. Global news 24 hours a day, on air and on Bloomberg Quick Take.
Thank you so much for that update, Nancy Lyons, Tim Stanovic, and Mike Regan, in for Carol Master this afternoon. Mike, you have your Halloween costume yet? You didn't know what I was going to. You were not prepared for that.
Not yet. You know, my kids no longer go trick or treating, so I kind of just hide out and dish out the candy.
All right, don't worry. You're not doing the spending, for costumes on Halloween. That has transferred to my family. Now, for the first year, we're actually spending money on Halloween costumes. I think since we were kids. Elmo is what my son wants to be, and he actually asked us to be Big Bird and Cookie Monster, respectively. And, we never do anything for Halloween, and we actually are planning to do something this year because he's close to 4 years old, so he gets it now. And we went on Amazon, and we actually bought some costumes, and it was surprisingly inexpensive. Like an Elmo costume is $30, which is pretty good. But it's interesting because here on the Bloomberg terminal, Spencer Soper, who covers Amazon out in Seattle for us, he says that they're seeing a, quote, scary holiday season, Amazon sellers, as consumers are pulling back. So more people like you than like me.
Yeah, right. And I mean, that's the risk of inflation, right? That it sort of starts influencing consumer behavior and threatens that stagflation scenario. I want to see you in this Elmo costume, though, I got to say.
He'll be in the Elmo costume. I'll be Cookie Monster. My wife will be Big Bird.
Okay. Well, you got to head right to Times Square and collect $1 for a photo in that costume.
I'm never going there with my kids. Before having kids, I never understood. And for people who don't live in New York or haven't been to Times Square, it's like full of people dressed up in really some really elaborate costumes. But the whole idea is to get your attention and to get you to pay them. Mike, inflation, not $1. Like $5.
$5 for a pic with Elmo now? Wow.
Yeah.
I wish I lived in Brooklyn. I'd go as Oscar the Grouch and tag along with you guys. I don't know. That's got to be a cheap costume, I would think.
I've already locked in the date. The 31st is a Monday. So, get out of here at 5, head to Brooklyn, and you can come trick-or-treating with us. Okay?
All right. I'm going to look for an Oscar the Grouch costume. Always my favorite.
Check out this story. It's by Spencer Soper. It's on the Bloomberg terminal. Amazon sellers are seeing a scary holiday season as consumers pull back. You're listening to Bloomberg Business Week on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Fewer than 43 minutes until the closing bell. We've got a rally underway in the equity market. It's on course right now to snap a 3-week losing streak. Let's get you the latest on all the price action. Bill Maloney is at the Bloomberg Macro Squawk Desk. Hey, Bill.
And good afternoon, Doug. That's right. U.S. stocks with an aggressive bid today, with the Dow currently up 424 points. S&P's gained 67, and NASDAQ trading higher by 2.2%. The U.S. 10-year yield at 3.32%. Gold is up 6, oil is climbing, and Bitcoin is surging by 9.5%. Among the main 11 S&P sectors, all were in the green, led by gains in telecom and energy. And leaders to the upside in the Dow, Salesforce, Caterpillar, and 3M, while fractional losses for Boeing. After earnings, DocuSign gained 10%, Kroger rose 7%. And in other news, Fed's board said leans more strongly to a 75 basis point hike. And wrapping things up, the U.S. 2-year yield rose to its highest level since 2007. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
Thanks, Bill. To get live breaking audio right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thanks so much for that update, Doug Krisner. Really appreciate it. Well, you might remember earlier this week, we spoke to Mitch Lowe, a former executive at Netflix. He helped found the company Redbox, those DVD kiosks. And then most recently, he was CEO of the company MoviePass. We posed a question to him about the metaverse, and he essentially said it's going to redefine the way that people get their entertainment. I'm having a hard time seeing it at this point, even though Facebook is spending billions of dollars on not just on the rebrand, but building that next generation of computing. So eager to have with us this afternoon Francois Candelon, who's global director of the BCG Henderson Institute, joining us via Zoom from Paris, France. The Henderson Institute is BCG's think tank. Francois, really good to have you this afternoon. How are you? Or evening, I should say.
I'm very pleased to be with you.
Yeah, it's good to have you with us. Hey, paint the picture for us, because I'm still having a hard time seeing it. I can, look at videos from Mark Zuckerberg as much as I want of, him playing games in the metaverse, but I'm having a hard time seeing how it's part of our daily life.
So I think that what we need to understand is the fact that, of course, everyone is talking about it because of all the bets that are made by what I call the metaverse's constructors. You have Meta with its $10 billion investment. You have Microsoft and its acquisition of Activision and so on. So I think that this is something that might become important. But the concept of metaverse is quite old. The term was created in 1992 in It's No Crash, the sci-fi novel, and we've been experiencing it already many times. You remember maybe Second Life, and so I think that we're
not still playing Second Life.
Nobody's playing that anymore. No, it can. So what can happen as well is that we need to be careful about the definition we want to put on the metaverse, because the more would we put some boundaries today, I'm sure that there would be some technological advance that would cause us to reassess. And this is a bit what is happening with all the clash of technology that we have on the one side, with the VR, AR that is getting more mature. On the other side, the Web3 tools. And so I think that this is from this clash that a new version of metaverse might come out. But at the moment, we have many potential metaverses. And this is one of the studies we've conducted to try to highlight and identify them. And to do that, because we're at a moment which is really critical, where everyone is trying to impose its narrative. And this is, I'm old enough, as you can see, to have experienced the launch of the internet in the 90s, or mobile internet in the 2000s. And at the moment, what is at stake is really the future balance of power. within metaverse stakeholders and how non-tech firms might benefit maybe from it or not.
Yeah, Francois, when I hear the idea of metaverse, I instantly think of the virtual reality goggles, like the Oculus from Facebook. Is that, when you think of the metaverse, does it always entail that type of headpiece, or is it more than that?
No, it's more than that. And as I was saying, basically, you have a clash now of visions. You have on one side players such as Meta and Microsoft or Magic Leap pushing a vision of metaverses where VR or AR will be the technological basis, and for Meta in particular, immersion will be key. So this is one part of it, and it's really based on massive investments on hardware. We could call it the hardware lock. On the other side, you have players like the Sandbox or Roblox pushing for visions of Web3 and blockchains where users will be key stakeholders and won't rely on the monopoly of big techs. And I think that this clash is really key. So you have two big streams that are coming one against the other, and it's very difficult to know which one will win.
Yeah, well, let's talk about that, Francois, because you talked about the bets that companies are making, and that's why the metaverse is getting a lot of attention. But what are the specific companies that are poised to win at this?
So I must admit that I don't know, and I don't have a crystal ball. I'm sorry for that, but I think that you can think about, let's say, different types of players. And as I was saying, we did an NLP analysis, a natural language processing analysis, to try to identify what the different types of metaverses we could find. And we identified actually 4. One which is more serving specific purposes, mostly for B2B. It's mostly, let's say, the Microsoft, the Magic Leaps that are doing that. And for them, the keywords they are using are holographic, team, experience. Then you have Meta, which is constructing a metaverse that resembles an immersive social media tool. And for Meta, the keywords are more people, creator, one. You have Sandbox or Epic, let's say Epic Games, which are trying to create new experiences, which is, if I may, a bit like a monetized expansion of the gaming industry.
Right.
And here it's more about game asset, blockchain, right. and you have the Roblox, of course.
Francois, we're going to have to leave it there, unfortunately, but a healthy list of names, companies that are poised to at least potentially position themselves well in the future when we're talking the metaverse. Francois Candelon, Global Director at BCG's Henderson Institute, the think tank of BCG, joining us via Zoom from Paris. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Mike Regan in this afternoon for Carol Master. In just a few minutes, we're going to be joined by our West Coast correspondent, Ed Ludlow. We're going to not only talk about Rivian, but also continue our coverage of the passing of Queen Elizabeth II. First up, though, let's get over to Doug Krisner because we got less than a half hour to go, Doug.
Yeah, and we've got a rally in the equity market, Tim. We are on course to snap a 3-week losing streak. Right now, the S&P is at a session high with a gain of nearly 1.7%. We had a number of hawkish comments today from a few Fed officials as we walk up to that meeting on the 21st. Right now, market is expecting another 75 basis point rate hike after similar-sized increases in both June and July. One concern at the margin is this possibility that the Fed will over-tighten and then, maybe sometime early next year, have to cut interest rates. Maybe that's behind some of the weakness that we're seeing in the dollar today. The Bloomberg Dollar Spot Index is down about 0.6%, and that in turn has helped to boost sentiment in equities. You know, a weaker dollar would be welcome relief for a number of multinational firms. Also important to point out, the Bank of America Bull-Bear Indicator. At the beginning of today's trading, it was at a maximum bearish level. Often that is viewed as a contrarian buy signal. Dow Industrial Average right now is up 1.3%. In the NASDAQ market, the composite index better by more than 2.1%. Let's talk about the chip makers very quickly. Late yesterday, Susquehanna Financial Group reported chip delivery times shrank again in August. Now, that could be a sign that the global shortage is easing even further. And today, Stifel said Advanced Micro Devices is its best bet out of the three major U.S. chip firms. AMD shares right now up 3%. And the Philadelphia Semiconductor Index is up by more than 2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, earlier today, King Charles III pledged, quote, lifelong service to his subjects in his first televised address to the nation as monarch, in which he paid tribute to his late mother, Queen Elizabeth II. For his reaction and more, we turn to Ed Ludlow, West Coast correspondent for Bloomberg News. He joins us from our Bloomberg 960 studio in San Francisco. Ed, we got to speak with you for quite a bit at the close of our program yesterday. We've now had more than 24 hours to continue to digest this news and understand the significance here. What was your reaction to King Charles III's first address to the nation as king?
Yeah, very carefully written, very carefully delivered, with emphasis on the Queen's life and the regal qualities that she displayed as monarch for that long period of time. And, you know, other than the lifelong commitment to service that King Charles III made, the other big takeaway for me was the kind of acknowledgement from him that King Charles III is not the same as the Prince of Wales, Charles. You know, he acknowledged, and he's been named a crusader, a campaigner, an activist, but those passions that he held in his life, in his role as the Prince of Wales, are no longer possible. And he kind of explained that he would have to take a step back from that as king. But he did also appear to pass the baton to his son, William, who, of course, now becomes Prince of Wales and inherits that title.
You know, Ed, I made the mistake last night of going on Twitter, which you should never do after a big news event. I fell into the rabbit hole of Queen Elizabeth Twitter, which was, it's fascinating, the love and the hate. And one of the things I noticed, Liz Phair, I don't know if you guys know Liz Phair, she's a singer from the 90s, who's about my age, mid-50s, and she had a tweet out expressing her love for the Queen and what a big influence she was on Liz Phair. Right. And such a tremendous backlash from her younger fans, you know, the millennials and the Gen Z fans against, you know, the imperialism and this and that. Is there a generation divide in England itself over the royals, such as I'm at least seeing on Twitter? You know, is there sort of, is it an older generation thing to be into the royals and the youngers not so much? Well, you have to remember there's a multi-generational divide that throughout the Queen's
Queen Elizabeth II's reign, there was great periods of social change. In the 90s, 1992 is the prime example, which the Queen described as her annus horribilis. There was a lot of emphasis on the tax obligations or lack of tax obligations of the royal family. And of course, following incidents in the 90s, they went on to pay income tax for the first time. The fallout from Princess Diana's death and the delayed reaction of the royal household, including by Queen Elizabeth II, was met with anger by much of the public in the UK because they love Diana. Now, fast forward to the modern period, there are simply sections of society that see the royal family as a burden on the state from a tax and wealth perspective, and perhaps they don't agree with the constitutional monarchy that United Kingdom has. But I would say, on balance, whether it's survey data or the response we've seen in London itself, in the United Kingdom or online, that there is a great deal of admiration and respect for what Queen Elizabeth II did in her lifetime.
Hey, Ed, no easy way to make a pivot here, but you don't just cover the royals.
No.
most of your job is covering companies like Rivian, Tesla, EV companies, and of course space as well. You wrote a story today about the market cap that Rivian added just by adding Mercedes as a frenemy. Take us to what's going on here, because in the news yesterday, with the Queen passing, we didn't get to cover Mercedes-Benz and Rivian joining forces.
Yeah, and this was an opportunity for me to poke fun a little bit at this deal, and I called Mercedes-Benz a frenemy. And they are really, because if you think about it, Rivian has sort of gone about making partnerships, first with Ford, who are a massive investor in them before their IPO, and now Mercedes, at the same time as making products that directly compete with those partners, right? It's not a surprise that Rivian would look to Europe. I reported in February of 2021 that they wanted to set up a factory, but what's happened since is soaring input costs. They're dealing with the struggles of ramping production. They're basically looking for some help. And for Mercedes, it's really interesting because Europe's not really ready to just go full send on electrification when it comes to commercial vehicles. So for them, it allows them to hedge their bets a little bit, leverage Rivian's kind of startup mentality and spark, and Rivian can leverage Mercedes's reputation in the supply chain and their manufacturing prowess.
Is there any sense of what this deal will look like in practice? You know, is it a matter of Rivian vehicles being produced at Mercedes-Benz factories, or them just using the patents? Do we have any idea what's going to happen?
And we got about 20 seconds, Ed.
Well, no, it's an MOU. They'll co-invest in an existing facility that Mercedes owns, either in Eastern or Central Europe, but it will be a new plant. And that's pretty much all we know, other than the actual end product will be managed separately by both companies. So there's a lot to learn. It's just an MOU, but the stock market clearly loved it.
A memorandum of understanding. And yeah, the stock market, look at that, $3 billion in market value added to the company as of yesterday's close. Ed Ludlow is West Coast correspondent for Bloomberg News, joining us this afternoon from the Bloomberg 960 studio in San Francisco. And to Washington, D.C. we go for world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. King Charles is remembering his mother, Queen Elizabeth, and consoling a nation that is mourning. He says he will draw strength from the light of her example as he takes on his new duties. He added a tender note at the end of his speech today.
To my darling Mama, as you begin your last great journey to join my dear late Papa, I want simply to say this: thank you. Thank you for your love and devotion to our family and to the family of nations you have served so diligently all these years. May flights of angels sing thee to thy rest.
King Charles paid tribute to his mother's commitment to service and says he will continue to serve as well. President Biden says he does not know the details yet, but he does plan to attend the Queen's funeral. He also says he has not had a chance yet to speak to the King. Biden was quizzed by reporters about a possible trip to Britain during a trip he made today to Columbus, Ohio, to break ground on a new Intel semiconductor plant.
Brand new $20 billion campus, 7,000 construction jobs, union construction jobs, 3,000 full-time jobs that will pay an average of $135,000 a year, and not all of them will require a college degree.
Biden says it is time to bury the label Rust Belt. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Well, you might remember a few weeks ago, Tiger Management founder Julian Robertson passed away. A big question was what ends up happening to his art collection. Paintings by Picasso, Dali, and Matisse were actually part of a bequest to the Auckland Art Gallery. So the art collection moving from New York City, Mike, to New Zealand.
Yeah, what fascinates me about this story, Tim, $181 million art collection that was in his living room. So I guess when you're a billionaire, you have a big enough living room to fit $181 million worth of art. But they can basically 15 masterpieces. That's enough for a whole room in a museum. Yeah, a whole wing in a museum. So all the way in New Zealand, though, I don't know. Maybe it'll be a good tourist attraction down under.
Yeah, Pablo Picasso, Salvador Dali, Henry Matisse. It was promised to the Auckland Art Gallery back in 2009 by Robertson and his late wife Josie upon their deaths. It was selected by the gallery from the couple's wider collection. You might remember Robertson died last month at the age of 90. He was one of the most successful hedge fund managers in the world for many years, amassed a $4 billion fortune. That's according to the Bloomberg Billionaires Index. He did shut down his funds in 2000, but remained a mentor to former employees such as Chase Coleman and more, who branched out to create their own investment firms and, of course, become known as the Tiger Cubs.
The Tiger Cubs. You know what I would really love to find out with this story is what appreciated more, his portfolios, his hedge fund, or his art collection, because guy's got some good taste. I mean, there's some big names in there. I imagine he did pretty well with his art buys as much as he did in the financial markets.
Yeah, according to Charles Nenow, the director of art at Webb's Auction House in Auckland, the current market value of the collection is more than $300 million in New Zealand dollars. That's about $181 million here. His son, Jay Robertson, said, he and my mother both felt strongly that they wanted the pictures, as he called them, to be seen by as many people as possible and have the greatest impact. He believed there wasn't anything like this in New Zealand, and it would be appreciated more than possibly anywhere else. So a little bit of the thinking behind their decision to bequeath this art to New Zealand. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is on course to snap a three-week losing streak. We are just off session highs right now with the S&P up about 1.7%. The Fed's next rate decision is September 21st. Today, a number of officials were making very hawkish commentary. We had the head of the St. Louis Fed, Jim Bullard, at the top of the list saying he's become more supportive of a 75 basis point rate hike. Charlie Evans of Chicago is open to another jumbo hike. And the head of the Kansas City Fed, Esther George, was saying the Fed has a clear-cut case for continuing to remove monetary support. I think it's fair to say the markets are expecting another 75 basis points after a similar size increase in both June and July. On the short end of the yield curve, the 2-year is up more than 5 basis points now at 355. Very little movement, though, in the 10-year. Right now, the yield at 331. We do have the Dow Industrial Average up about 1.3%, and in the NASDAQ market, the composite index higher by just about 2% right now. We have a rally in shares of Kroger. The company's earnings estimates exceeded the Street's forecast, and Kroger also raised its annual forecast, citing strong demand for prepared food at home, along with a shift toward private label goods. Kroger shares up 7%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The recent death of Queen Elizabeth II marked the end of one of the most remarkable public careers in modern history. Amid geopolitical upheaval, social turmoil, and technological revolution, the Queen's decency and grace brought stability to Britain and endeared her to generations all over the world. Considering the transformation of British society that took place over her 7-decade reign, perhaps her most striking achievement has been preserving the institution of the monarchy itself. While support for the monarchy has slipped in recent decades, a solid majority of Britons want it to continue. That's a testament to the Queen's leadership. As she demonstrated one last time during the COVID pandemic, Elizabeth served as an enduring symbol of reassurance, diligence, and integrity. For that, she deserves the world's admiration. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, we are already there. Wow. What a week. It's like a short week, but kind of felt like a long week in so many ways. At least for the equity market, though, we're looking like it's going to be the first green week in 4. The S&P 500 higher by 1.6%. The NASDAQ, though, really blowing things out of the water, up by 2% right now. Really eager to hear what Amy Kong has to say. She's Chief Investment Officer at Barrett Asset Management. Amy joins us this afternoon on the phone from New York City. Amy, how are you?
I am well, thank you.
Hey, it's good to have you with us. Should investors trust this rally?
It's a great question. I think the answer is probably be cautious. At the end of the day, yes, this is a rally from a 3-week losing streak, quite frankly. But ultimately, what we're watching for is the direction from the Fed. We've heard from Powell this week, and the message is very clear, very consistent with what we heard in Jackson Hole as well. They are not yet done with their plans to increase interest rates. They are not yet done to fight inflation. And given that they are very data dependent, given that they are watching the data very carefully, and we're looking at several more rate hikes, I'd be cautious with rallies like this. I certainly don't think we're in a position to put new money into the market, especially without any clear guidance from the Fed that they're done.
So when are you going to be in a position to put new money in the market?
Yeah, it's a great question. I think it's really thinking about whether or not we're in a position where we're seeing peak inflation. We have started to form a peak, but it's very different from the Fed being done. I think the Fed needs to get Fed funds rate to a point that it covers inflation, and they're very far from that point at this moment. And so even though we may be seeing evidence of peak inflation, it does not indicate the Fed will be done with their mission, if you would, to increase interest rates.
Amy, I feel like almost every investor I've talked to recently has been very skeptical about the earnings estimates for 2023. And there's this sort of consensus vibe out there that these estimates are going to start getting cut, that companies' own outlooks are going to get cut. We've seen a little bit of that already, but I wonder how bad you think that could get, and is the third quarter reporting season, say in the middle of October, is that the time when we're really going to get hit over the head with that type of thing?
I agree with you. I think the third quarter earnings season coming up in the fall, as well as the fourth quarter, as some companies report in a calendar year, those are the quarters to really watch for, because we did go through the Q2 earnings season, but really a lot of the companies we've heard from have been hush-hush about what they think will transpire in 2023. Right now, when you look at the consensus estimates for S&P 500 earnings, the estimated growth rate is still around 8%. And from our perspective, that's probably on the higher end. We expect that to come down. I don't think that's going to come down until you have management teams guide analysts on the street in terms of what they're seeing, and that's not going to happen until the fall, to your point, as well as in the January week when Q4 numbers start to come through.
So that would leave sort of only valuation expansion as the avenue to get a really nice rally into the end of the year and next year. Do you get the sense that investors are sort of won't stomach much higher valuations than what we saw? It looked like the forward S&P 500P kind of topped out at about 18 during that real strong rally over the summer. Is that about as good as it can get for valuations, you think, given this inflationary environment?
Historically speaking, the answer is yes. When we look back at decades of stock market history, to your point, the market tends to not reward the stock prices from a T perspective in the PE stance. Its inflation starts to run higher than 4%. For the longest, we've had inflation between 0 and 3%, let's call it. And with that in mind, market participants were willing to award a PE ratio north of 19 times, even 20 times. This situation today is very different. Certainly we've got CPI at 8%. We don't expect it to be 8% forever, but even if it trickles down to between, let's say, 3 and 6%, depending on where it lands, I think history tells us that market participants won't reward a PE ratio, north of 18 or 19 times.
So at what point are you going to look at the CPI number and Amy, and say that, okay, I'm convinced that inflation is actually coming down? What the Fed has been trying to do over the last few months is actually working. What number does that have to be?
It's a great question. A lot of investors out there, including us, we question, whether or not the Fed has to even change its long-term target of 2%. That's obviously a much broader question that I'm not in a position to answer. I would say, somewhere in the tune of between that 3 and 6%, I think would be a reasonable area over the next couple of quarters for us. And I think we're starting to see that. Clearly energy prices have trended lower. But one area that we're watching as well is the real estate market. Given mortgage rates now up to 6% again, or close to 6%, that affordability index has really trended lower. And what that may mean is a rollover into rent. Maybe you'll hold off on buying a house and then you stay in the rental market. I think the rental portion of CPI, which as you may know is almost a third, that's likely to be an area that could heat up and could actually offset some of the relief we're seeing from the energy prices coming down more recently.
Amy, it's fascinating we're seeing this huge rally today, a good gain for the week, really. Not much has changed as far as what investors think of the Fed, but what has changed is we have seen 75 basis point rate increases from the ECB and from Bank of Canada. Do the rest of the central banks catching up with the Fed and sort of maybe putting a lid on this dollar rally? Is that an important theme right now, do you think?
We've got about 30 seconds, Amy.
Yeah, I think it does help. I think it is also helpful that the ECB and the central banks around the world are all collectively moving in the same direction to try to fight inflation. I think that's also a bigger message. And while nobody wants any kind of central bank to tip the economy into a recession, I think the fact that it is collective effort means a lot. And certainly with a lot of commodities using dollars as a price gauge, the fact that there could be a lid on the U.S. dollar against other currencies, I think could be a positive overall.
Amy Kong, Chief Investment Officer at the asset manager, Barrett Asset Management, joining us this afternoon on the phone from New York City. We're just a couple minutes away from the close. Don't go anywhere because we're going to be joined by our TV team for our Beyond the Bell coverage on Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Briggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stenovic, who puts in a full week. Carol Master is off once again
It was a short
today.
week.
Mike Regan filling in for her. Maybe she'll be back next week. We welcome our audiences across Bloomberg Television, radio, and YouTube on a day, Tim, where we're looking at a pretty strong rally, even though volume a little bit below what we would normally expect. The big question right now is how much staying power does this rally have?
Yeah, I'm so glad that's what you bring up, Romaine. We just spoke to Amy Kong, the Chief Investment Officer at Barrett Asset Management. Here's what she said, quote, "I'd be cautious with rallies like this. We aren't in a position to put new money in the market." She's concerned that, yes, we're seeing a peak with inflation, though we're not necessarily seeing evidence of peak inflation. She wants to see the Fed being done with their mission to increase interest rates.
Peak, that was nuanced. Peak in inflation,
Yes.
but not peak inflation.
It's sort of like peaked versus peaking, right? Because we don't know how long it's actually going to be up there. You know, I called it, I've brought this up before. I called it the gerund.
The gerund?
Yeah, and a listener got in touch and
What's
said,
happening?
that's actually not the
Caroline,
right.
I think it was
That's actually
Ladies'
not
Day,
the
and
proper.
Tim's getting back for us for hosting Ladies' Day, and now we're outnumbered with crazy thoughts from Tim.
Well, speaking of peaks, I'm going to go out on a limb and risk getting mocked by Romaine and take a peek at the charts because something that really I think is encouraging about this gain we've seen this week. Like all year, we've seen really nasty drops in the S&P 500, then a rebound that looks like a bear market rebound, then another drop, and they have tended to set lower lows each time. This time we've actually set a lower or a higher low with this latest drop down. So, you know, Romaine, something that the chart watchers, I think, will take
All right. Well, we came into this week, of course, with a lot of bear talk, a lot of interesting notes here about the potential that some of the bounces we've been seeing are a little bit of a false move, and maybe we are headed for a prolonged bear market. At least for today, that doesn't seem to be the case, with the Dow Jones Industrial Average finishing higher by about 377 points, up 1%. The S&P 500 higher by about 1.5% and closing for the second day above 4,000. The NASDAQ Composite higher by 250 points or 2%, and the Russell 2000 also participating here on the day, up about 36 points or 2% here on the day.
Tim, I'm just going to step in if we will. That was a beautiful, nicey closing bell with the tunnels to tower marking 9/11 and the 21st anniversary. And it's an incredible foundation as we think about some of those foundations that have emerged since 9/11.
Yeah, in just a few minutes, we're going to actually be speaking with the retired FDNY Battalion Chief, Joseph Pfeiffer. He was the first FDNY captain to respond to the 9/11 attacks, and he's got a brand new memoir out. So we're looking forward to speaking to him. Back to the markets, Taylor. Talking breadth here. 49 stocks moved lower in the S&P 500. 452 moved higher. So just in advance, you got to have some sympathy for me looking for decliners today.
Yeah, well, let's talk about that breadth. No sympathy for me because it's all green on the screen here, Tim. So I have a winning kind of day. Take a look at sort of the sector best performers, the worst performers. It is all green, all on the screen, everywhere. So take a look at some of the winners: auto, energy, media components, semiconductors. You're all up at least 2% or so on some of these individual sectors. Mike, the worst performers were still gainers by a quarter to even 0.5%. Down at the bottom of the screen, you have banks, food and beverage, utilities that are still rallying on the day.
Yeah, Teller, well, let me unpack a few of the big gainers in the individual names of the day. Dish Network leading the gains in the S&P 500, up about 8.6%. A lot of buzz about a board member, James DeFranco, buying about $1.8 million worth of shares, according to a recent filing. So someone buying the dip in that Dish Network stock. Also, Kroger up about 7.5%. They exceeded Wall Street's earnings estimates, raised their annual forecast. This is one company that actually benefits from the inflation. People are eating more meals at home, and Kroger, the grocery store chain operator, is benefiting from that. And obviously, oil is a big story today, rebounding pretty strongly today. So leading the charge in the energy names is Baker Hughes, up almost 6%.
All right, you got the gainers, Mike. I'm going to take a look at the decliners. Let's go to the first one that we have, Enphase Energy. Romaine, you actually mentioned this earlier. Among the worst performers in the S&P 500, down 3.7% on the day today. The solar equipment maker getting a cut from Guggenheim from buy to neutral, arguing that it's fairly valued given that it's had a really good run this year. It's up more than 60% versus the S&P 500, down just about 14.7%. Starbucks finishing the day down by about 1%. It actually started out in the green this morning, but finishing in the red. And then SPCE is the ticker. Virgin Galactic is what we're talking about. The company was downgraded to underperform by Bernstein. Check out what the analysts had to say. The company's second quarter results followed a pattern over the last 2 years that has meant delays to flight operations, redesign of elements on its platform, and a need to raise more cash. So some concerns there. We're talking space a little bit later with Matt Goad over at the Zero G Corporation. They take you up in a modified 727, so you get to experience weightlessness. That's certainly on my bucket list of things to do.
Well, you're doing well on the teasers for what you've got coming up on your show. Really thoughtful there. I'm interested, though, on really the narrative of the day's trade, and it felt to me like it was the dollar doing a lot of the work here. Whether or not that was actually people taking profits at the moment, because the dollar has been on a tear, not just on the week, but on the month, on the year. We're currently seeing dollar index off by 0.6%, so it actually trades lower through the course of the week on the back of that. What rises higher, the Swiss franc actually strengthening more than a percentage point. The Aussie dollar, as we start to see maybe a little bit more risk-on sentiment, even though China still looks pretty poor in terms of economic growth, the Aussie gets higher. Norwegian krone actually manages to push and strengthen more than a percentage point. Why? Because oil traded higher. Now, we're still down on the week, but it managed to claw back some of those losses, with WTI crude up 3%, Brent crude up 3.6% as well. Natural gas also managing to claw back some of the original losses, as we see maybe less of a supply issue than we had, well, more of a supply issue than we'd thought, and therefore maybe a little bit push higher in the supply side. I'm looking at iron ore getting a bid. As really it felt like a risk-on trade across commodities, across FX, and then you look at bonds. Well, not much of a flight to any havens, and so therefore the risk-on continues here. Money moves out of the Japanese debt, out of Portuguese and Belgian debt. So clearly there was a flight out of the bond market, felt like today, Taylor.
We're seeing that in the U.S. on the front end of the yield curve. Yields are rising on 2s and 5s, up about 5 basis points on 2s, 3.5565, near the highest that we haven't seen since 2007. Further out, though, 10s, 20s, 30s, bonds are actually really catching the bid, as maybe perhaps today the narrative is we're going 75, and that indeed will push down growth. It will push down inflation on the horizon. And so it's a flatter yield curve that, given the inverted world in which we live, gives to more inversion from -19, Tim, to -25 basis points on the day.
Okay, well, let's talk about next week and the CPI report that we're going to get. It also means that we're not going to be hearing from Fed officials because, well, we've been hearing a lot from them lately. And Romaine, there's a blackout starting in the coming days, so we're not going to have to. We're going to have to no longer parse everything that they're saying to try to get a good understanding.
Yeah.
We heard from the
federal.
federal.
They've been talking a lot, so I mean,
that's what I was going to say.
We kind of need to hear from them.
I mean, are we kind of done with what's going to happen in September, and have we moved on to November already? Because,
well, I mean,
yes, the CPI number comes next week, and we get consumer confidence as well. Not consumer confidence, but inflation expectations. Excuse me. Could that really change what the Fed is going to do when it comes to
and they basically said that already, and I think Dudley kind of alluded to this, that no matter what happens with the CPI report, unless it's something absolutely just astronomical in either direction, is not really going to move the needle much off of that one data point. And do keep in mind, it's not just the CPI. We get PPI. You also get a lot of those sentiment numbers, the Michigan sentiment, but also the small business optimism index, I think is going to be interesting to look at as well. So you'll get a bit of a read here, not just on what the hard data shows, but really how people are feeling, how they're thinking, and I think that's going to play a big role in what the Fed does next.
Yeah, and also not on the calendar, but we are getting closer to the end of that third quarter earnings season. A lot of people expecting some sour outlooks to come as a result. And so this might be the season where some companies start pre-announcing, Taylor, and sort of giving a heads up that, hey, watch out, our outlook is not as good as we thought it would be. So while not on the calendar, something I think we should sort of brace for perhaps in the next couple of weeks.
Mike, we've heard other strategists echo similar sentiment, saying that this is sort of the time of the year in that pre-announcement where things could get really, really volatile. Because if you have a company that set out a full year guidance, they're going to realize this quarter if they can hit it or not. And if they can't, they're really going to start to pull the plug on that and rethink the strategy. And so some volatility around the earnings, the pre-announcement is certainly something that we've heard strategists talk about.
And that's why the Mike Wilsons of this world have been so bearish, the fact that they feel that earnings are going to roll over. The fact that, what struck me today was the fact that we had such a risk-on rally, despite an awful lot of bearishness coming out of Bank of America, for example, the sheer weight of money being pulled out of stock funds at the moment, $11 billion or so just in the US funds, and indeed, well, Deutsche Bank, with really sort of negative perspective in terms of if we did indeed see a recession, we're going down to 3,000. We sort of bought the dip, though.
Right, and obviously then some of that data, of course, it doesn't really capture the full week, but when you look at that data, you look at some of the CFTC positioning data, which of course only goes through the start of the week here, you get a sense here that people are still bearish. There, you do have a big net short out there, at least among some of the leverage funds here, so people aren't necessarily buying into this just yet, and some of the moves higher we saw this week definitely had to do with short covering.
All right, guys, we got to go, but that is going to do it for our cross-platform coverage. We got a lot of great guests coming up on Bloomberg Radio. I think I actually was able to tease all of them just in the last few minutes.
It's interesting. So when Carol's not there, you don't have any sort of wine or alcohol guests on. Is that
not today? Okay. Yeah. But that's a good reminder to book some for next week. Yeah, Mike's with me on Monday and Tuesday, too, so it's not too late to get some on the calendar.
Taking some time off.
All right, you guys all have a great weekend. We're going to be back here at the same time, same place on Monday for our Beyond the Bell coverage, live on Bloomberg TV, Bloomberg Radio, and on YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Mike Regan in for Carol Masser. Stocks finishing on a high note. 1.5 on the S&P 500, 2.1 on the NASDAQ. Let's get to world and national news. Nancy Lyons is standing by in our DC newsroom. Hey, Nance.
Thanks, Tim. King Charles III says he feels profound sorrow at the death of his mother, Queen Elizabeth. He spoke of the loss today in a televised address.
In a little over a week's time, we will come together as a nation, as a Commonwealth, and indeed a global community, to lay my beloved mother to rest. In our sorrow, let us remember and draw strength from the light of her example.
NATO's Secretary General Jens Stoltenberg is among the many voices paying tribute to the Queen today.
She was a strong supporter of transatlantic alliance, of our armed forces and our values. She knew and worked with all NATO Secretaries General since the founding of NATO.
Stoltenberg says he'll also always remember the Queen's wisdom and her warmth. President Biden says he has not spoken yet with King Charles, but he did say today he plans to attend the funeral of Queen Elizabeth. He told reporters that, quote, "I don't know the details yet, but I'll be going." Well, the president is sounding hopeful about the future of semiconductor manufacturing in the U.S. He visited Ohio today, where he participated in the groundbreaking for the world's largest Intel factory near Columbus.
We need to make these chips right here in America to bring down everyday cost and create good jobs.
Biden says the plant shows that the industrial Midwest is back. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenovic, and Mike Regan. We are live this afternoon. Mike filling in for Carol Masser, who is taking a little bit of time off in this September. Let's talk a little bit about, well, some not great news, although maybe the whole reason they're doing this is to actually get more funding. New York State declaring a state of emergency. not over monkeypox, not over COVID, but Mike, over polio.
Yeah, polio. Executive order signed by the governor expands the network of vaccine administrators to include emergency medical workers, midwives, and pharmacists. So I guess they're really trying to boost the efforts to get people vaccinated for polio, which I guess many of us got as kids, but in this day and age with so much hesitancy and controversy over vaccination, maybe it's just a good reminder that, you know.
Were you, like, I don't, you know, again, I don't want to make the show all about our kids, but like, you know, when you were vaccinating your kids when they were young, was there any conversation about this? I mean, did the doctor have to convince you at all?
Not me, not my wife and I, but there's certainly, you know, I've had friends and relatives who have been worried about the link to autism that people have made. And, you know, look, I'm a markets guy. I don't know the science enough to know how concerned you should be about that, but
we should note that the paper that was published in had, you know, actually got pulled after further evidence. But the concern that people had as a result of that stuck.
Right, that's the thing. You know, something like that gets released into the wild, and it takes on a life of its own. So it's just strange times we're living in, where people second guessing science. So hopefully this does the trick and gets everyone those polio shots who needs them.
Well, here's something to think about. New Yorkers who already have completed their polio vaccine series should receive a lifetime booster after coming in close contact with a person suspected to be infected by the virus. This is according to the health department. The department also recommends boosters for healthcare workers in Rockland County, Orange County, Sylvan County, Nassau County, and New York City who may handle specimens. Check out this story. It's on the Bloomberg Terminal, and check out more coverage on Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Rally in the equity market today, although we did finish off the best levels of the session. Nonetheless, we were able to snap a 3-week losing streak. S&P 500 today up more than 1.5%. We saw strength among communication services along with energy and information technology. NASDAQ composite rallies by more than 2.1%, and for the Dow Industrial Average, a gain of about 1% today. The Fed's next rate decision is on the 21st, and today a number of Fed officials were making some very hawkish remarks. Among them, the head of the St. Louis Fed, Jim Bullard, was saying he has become more supportive of a 75 basis point rate hike. That seems likely. That seems to be what the market is betting on after similar increases in both June and July. If there is a concern at the margin, it's on the Fed over-tightening and then being forced to cut rates early next year. That may help to explain some of the weakness that we saw today in the dollar, with the Bloomberg Dollar Spot Index dropping about 0.6%. But that weakness in the greenback helped to strengthen the equity market, welcome relief for some of those big multinational firms. And it's important to point out that the Bank of America Bull Bear indicator at the beginning of the day was at its maximum bearish level. That's often viewed as a contrarian buy signal. 10-year Treasury last quoted in New York at a yield of 3.31. The 2-year was up nearly 6 basis points today to 3.56%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. Well, it's difficult to believe, but it's been almost 21 years since the 9/11 attacks. The New York Stock Exchange earlier taking a moment of silence this morning to commemorate the anniversary. And we're thinking a lot about it as we approach the 21st anniversary on Sunday. Very pleased this afternoon to be joined by Joe Pfeiffer. He's a retired FDNY battalion chief. He's also author of the book Ordinary Heroes, a memoir of 9/11. Joe joins us this afternoon on the phone from the UN. Joe, good to have you with us this afternoon. How are you?
Good. It's good to be with you.
So you were the first FDNY chief to respond to the 9/11 attacks, and your new book is a memoir and also a tribute to those who died and also those who didn't and survived the attacks. What made you want to write this book now?
I wanted to have some time of reflection, 20 years, and tell people the story of what it was like that day for me, for my firefighters, and for the people that were in the greatest moment of need. And I took the title Ordinary Heroes for a particular reason. Because we think of firefighters as superheroes, but we don't consider ourselves that at all. What I saw that day was my firefighters going up to evacuate the building and to rescue those that were trapped. And they went up doing some ordinary things by telling people who were coming down the same stairs, don't stop, keep going, you can make it out of here. And we know from people who survived that those simple words made a difference.
You know, Joe, it's just such catastrophic, heartbreaking losses for the fire department that day. Correct me if I'm wrong, I think it was more than 340 firemen lost their lives that day. I can't imagine what it would be like to sit down and write this book. You know, you lost friends, colleagues, people you mentored, I'm sure. Was it a cathartic experience? Did it help you in sort of wrap your head around what happened and your mental state, or was it really painful to do?
Well, it took a long time, and there was some moments of pain, but it was also looking back and finding a sense of hope. So in the darkness of the dust cloud, which we all remember covered lower Manhattan when the buildings collapsed, people also saw on TV the firefighter's helmet. And on our helmets is a little flashlight, so a little beacon of light in the darkness. And I think writing the book allowed me to look at those moments of hope in the darkest times for us.
You know, one thing that I've been thinking about, Joe, over the last few years when we do get to this anniversary, as I've been reflecting, is that each year more and more people exist who didn't experience it, whether or not they were in California in high school, like was my own situation, or they were in New Jersey and perhaps had friends, parents perish, like some of my friends. And I'm wondering how you think about that, the idea that, you know, I met an intern here at Bloomberg this summer who was, you know, in his early 20s and was born after, you know, 9/11.
Mm-hmm.
And it's just, I mean, how do you think about something like that? Because it was a shared experience for so many people, but that shared experience is kind of getting smaller.
The experience is getting smaller, but what I noticed with writing the book, and I was really surprised, was the amount of emails I got from young people, the 20-year age group.
Wow.
And they said, you know, I wasn't born or I was too young at the time, but I saw the documentaries and that I read your book, and I just wanted to tell you that what was done that day helped me go into public service. It inspired me by looking at the documentaries like 9/11 with Jules Sondé that filmed me, and then to read the book, we'll put it all in perspective for them. So they weren't old enough or born, but they're living the experience in real time now through books and through documentaries, and it's just as personal for them as it was for us 21 years ago.
You know, Joe, obviously here at Bloomberg, we're sort of laser focused on financial markets. And in markets, whenever there's sort of this unexpected event that really changes everything, you know, they call it a black swan event. And I can't help but thinking of 9/11 being a black swan event for the whole business and process of fighting fires. You know, something no one in their worst nightmare really expected, and then all of a sudden you're confronted with it in real time right in front of you, and you have to make split-second decisions on what to do about it. I'm wondering what the lessons learned are for the profession of firefighting. Has it changed a lot about how you train and how you think about responding to stuff like this? You know, is there a new paradigm of firefighting that's come out as a result of this?
Firefighting has changed. We look at the threat environment. We're connected to the intelligence community and see what's happening, not only threats in the United States, but also threats around the world. We also work very closely with our law enforcement partners. No longer do we see this separation between fire and police. And particularly in New York, we train together. And we have the police officers run into, for an active shooter, for example, we'll run in and engage the shooter, but at the same time, we'll bring in our medical folks, of fire and EMS medical folks, to take care of patients. So we have to depend on each other. And the police also depends on our medics to come in danger to rescue their officers, take care of the medical needs. So a lot of changes.
Joe, you've done so much in the last 20 years. You retired from the FDNY. You wrote this book that you published last year, Ordinary Heroes, a memoir of 9/11. You're director for crisis leadership at Columbia University. You're a senior fellow at the Harvard Kennedy School and the Combating Terrorism Center at West Point. You also this week participated in the United Nations Global Congress of Victims on Terrorism with UN Secretary General Antonio Guterres. What was that like?
I'm actually at the UN now, and I'm with victims of terrorism throughout the world, and I hear their stories of losing loved ones, their young children, their parents, their friends, and it becomes very real. But the one thing that we realized here at the UN is that we don't ignore the pain of being a victim of terrorism. Instead, what we do is we give it purpose to change the world, to make a difference. Because without a purpose, there is no hope, and without hope, there is no actions. So we're looking at it here at the UN. We're looking to collectively have our voices heard to combat terrorism, and also to support the victims of terrorism and throughout the world.
You know, Joe, one of the most heartbreaking things about 9/11 was that so many firefighters spent so much time digging in the pit trying to find, at first, survivors, then remains, and so many of them suffered some health problems later on. Has enough been done for those victims of 9/11, do you think? Is there more that needs to be done?
I think there's always more that needs to be done. And the reality is difficult to comprehend. So in the New York City Fire Department, we lost 343 of our members on 9/11. But post 9/11, we've lost over 280 of our firefighters and EMS personnel that responded that day. And I think, as we look at human rights throughout the world, we have to think about the victims and their families, and how do we support them? One is medical assistance, the other is psychosocial assistance, and not just of the people that were there that day, but their families and their children, because the children of victims are also affected. So we have an obligation when a terrorist event occurs to take care of the victims and their families.
Joe Pfeiffer is a retired FDNY battalion chief. He was the first FDNY chief to respond to the 9/11 attacks. His book, Ordinary Heroes, a memoir of 9/11, it was published last year, the 20th anniversary of 9/11. Joe Pfeiffer is also the director of crisis leadership at Columbia University and a senior fellow at the Harvard Kennedy School and the Combating Terrorism Center at West Point. Joe joined us this afternoon from the UN. Joe, thanks so much. Really appreciate you taking the time. Well, let's now turn it over to Doug Krisner, who's standing by with a look at the upside on this Friday.
Yeah, quite a bit of upside, Tim. We snapped a 3-week losing streak in the equity trade with the S&P 500 higher by more than 1.5% today. Even before today's trading began, the Bank of America bull-bear indicator was at its maximum bearish level. That's often viewed as a contrary buy signal, so that may have been one factor. Another thing to consider, too, is the fact that we had a number of Fed officials making very hawkish comments. We already know that the market is braced for 75 basis points in terms of a rate hike later this month. One concern is on the possibility of the Fed over-tightening and then sometime early next year being forced to cut rates. That may have been behind some of the weakness we saw in the dollar today. The Bloomberg Dollar Spot Index was down 0.6%. That would be welcome relief for some of the big multinational firms that have warned about the drag of dollar strength, particularly a company like Microsoft. Today, the Dow is up 1.2%. NASDAQ comp rallies by more than 2.1%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, legalized U.S. sports betting, it is accelerating at a rapid pace. We've got over $57 billion worth of wagers in 2021, and I wonder what that 2022 data is going to look like. You can now place wagers in more than 30 states and major sports leagues, and companies are cashing in. Each week, Bloomberg The Lineup, it's hosted by Kaylee Lyons and Damian Sassower, gives you the latest data on betting trends and talks with the biggest players in the industry. We're very pleased right now to have joining us Damian Sassower, Chief Emerging Markets Credit Strategist, but we are not talking EM credit strategy here. Well, are we, Damian?
No, we're not, Tim. No, not this time.
You know, it's funny. I'm so glad to be talking to you because a couple weeks ago, Katie and I were talking about golf on air here, and Katie was complaining about how boring golf is. She's her words, not mine. She's not here to defend herself. But as soon as we got done talking, we both get this email from Damian Sassower, who's listening. And Damian, I don't know if you're at the office, if you're on the way home, and you were arguing golf is not boring, playing golf is not boring, watching golf is not boring. And, you know, an email chain ensued of about a dozen emails, and Damian has a PowerPoint presentation ready to prove to us about how enthralling golf is. So I can think of no better person to anchor this program, which, by the way, premieres tonight at 7 p.m. Wall Street time on Bloomberg TV. Damian, talk to us a little bit about what people can expect from the lineup.
Yeah, well, sure. I mean, look, first of all, Tim, when I sent you that email, it was funny. I was on my way to my son's soccer game. It was a beautiful Friday. The sun is out, the sky is blue, and, you know, I mean, how can she even say golf is boring? It was absolutely gorgeous. So anyway, I had to pull over and I had to send that text. But, you know, look, you mentioned earlier, you know, on the intro, and thank you for that intro, and thanks for having me. I mean, yes, it was $57.2 billion last year. I just spoke to the American Gaming Association that compiles that data for us this morning. We are already at 50.4. We're almost at last year's full year number, just to give you a sense of where we are here, because we have New York and Louisiana now online. And by the way, before the end of this year, we're going to see California vote, right? You know, Puerto Rico's just launched. Washington, D.C. has just launched. So let's be clear. If we hit the $100 billion, they call it the handle, right? That's the amount of legalized sports gambling in the U.S. If we hit $100 billion this year, we're talking annual GDP the size of Oman, you know, which is an oil producer in the Middle East, just to get a little emerging markets on you. So, Tim, that's where we're at here. Now, in terms of the show, we got a great guest tonight. You know, we have former New York Giant wide receiver and Super Bowl champ Victor Cruz helping us break some things down, which is very cool. And look, you know, I mean, we're not going to tell you what to bet, but, you know, one thing I'm pretty good at, one thing Kelly and I together are really good at is analyzing data and communicating in a way that, you know, can really, I think, help you make more informed decisions, right? Because, I mean, what is sport gambling? It's a bimodal outcome. It's an options market, right? It's just like any asset class with options. And so you have to think of it that way. And that's kind of the way we break things down, the way we look at it. We use a lot of great data, historical data on money lines and spreads, which you just can't get, to kind of, you know, do some interesting things, make some interesting observations, I guess.
Bet against the Jets. Is that the bottom line here, Damian?
So it's funny. I'm a Jet fan. I'm a suffering Jet fan as well. It's funny. You know, you ask about the Jets. I'll tell you this. You know, four of the four teams that have the worst odds to win the Super Bowl this year. Okay, one of them is not the Jets, but two of them have former New York Jets quarterbacks. Those being the Seahawks and the Falcons have Mariota and Geno Smith. And it's no secret that you know, the sport books are pretty sour on them this year.
So break down that 57 billion for us. I'm guessing the bulk of that must be NFL. Is that a fair guess?
It's more than a guess. I mean, it is the market, right? I mean, if you look in 2019 before the pandemic, it's that August to September spike in handle growth. It's massive. It's like a doubling, right? Because, you know, everybody's off for the summer. There's nothing really going on. As soon as the NFL hits, then you get the NBA behind it. So it's really, I mean, so even though we're already in September, it's these next 3 to 4 months. I mean, this is it, right? I mean, you're going to see a lot of sport betting taking place. And look, you know, the reality is 89% Americans who bet on sports last year indicated that it's really important to them to bet with a legal regulated sport book. So the days of the pink sheets are kind of over, right? You know, I mean, 46.6 million Americans, this is the AGA, I spoke to them this morning, are planning to bet on the NFL this season alone. That's up over 3% year over year. So it's growing, man, and it's growing like in the billions. So, you know, it's going to be an interesting year for sure.
You know, what's so remarkable about this too is it's also a media story, and it's a media story in the sense of, you know, when we think about traditional pay TV and the bundle and the unraveling of the bundle.
Traders, hello again. Good evening. Before the Friday end, you can say like that. I want to place an order over the weekend for Bitcoin, and I want to place order for 4% in profit, stop loss at 20,725. So if you hold your position, we're already in quite a good profit. And right now I want to increase stake for Bitcoin, and I want to place stop loss at 20,725. Okay, if it will close over the weekend, that's fine. We will have 4% in profit. So all of you guys, if it all depends what broker you're using and who you're trading with. If your broker allows you to place order like we do, please do so. If not, you have already 8% in profit from the point you purchased a few days ago Bitcoin when you decided to copy my trade. Okay, so I tell you what I want to explain, and I'll tell you either you can sell it with 8% in profit, or you can keep yourself in game and place order at 4% in the profit, and let's see what's going to happen next week. Maybe it will go even higher. It's up to you. For us, we're already £4,000 in profit. We're already £8,000 in profit, but we place order. If it will move down, the order will be sold at 4% in profit. Okay? Stay safe. Have a nice weekend, and we'll see what's going to happen next week.
Going in so many different directions. It's such an incredible market, and it's a market, quite frankly, where there's real data, historical data out there that I think if you kind of, I mean, look, we haven't run the data on prop betting. I'm sorry. I mean, I'll give you this last one, but we've run it on parlays, which, you know, a lot of people bet, and it is a loser's bet in any sport across any time period.
We're going to have to tune in tonight at 7, Damien. We are unfortunately out of time. Damien Sassower, he is the host with Kaylee Lyons of The Lineup. It premieres tonight at 7 p.m. Wall Street time on Bloomberg TV. World and National News now with Nancy Lyons.
Thanks, Tim. In his first address as King Charles III, we heard a son share his loss.
I speak to you today with feelings of profound sorrow.
King Charles went on to say he realizes the world shares in his grief.
The affection, admiration, and respect she inspired became the hallmark of her reign.
At 73, Charles becomes the oldest person to ascend to the British throne. Former Secretary of State John Kerry is in London. He had been meeting with then Prince Charles in Scotland in his role as Special Presidential Envoy for Climate. Kerry says Charles will likely transition well into his new position as king.
I have total confidence King Charles is very savvy. He's been thinking about this and preparing for it for a long time, and standing in for his mother in these recent months.
U.S. climate envoy John Kerry. President Biden says he does not know the details yet, but he does plan to attend the funeral for Queen Elizabeth. During a trip to Ohio to break ground for an Intel chip factory, Biden says he's not been able to speak yet with the king. Several big changes in Major League Baseball. The league has adopted its first pitch clock, placing new limits on defensive shifts, and decided to make bases larger to protect the players. The hope is the changes will speed up the game and make it safer. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Well, we're going to continue a little bit with our sports theme here. Great story on the Bloomberg this afternoon about how the MLB's Mariners are trying to lure workers from their desks. They got a lunch deal and $50 Wi-Fi. Can you work from the ballpark, Mike?
You know, Tim, I have a hard enough time convincing my boss to let me work from home. I think that might be one step over the line, working from the ballpark. Although, if it's a boring game, maybe you can get some more.
Can you imagine being on that Zoom call and then hearing like, seventh?
It's a long fly ball.
Takes me out to the ball game. Is like playing on the horns.
They do say we received overwhelming positive fan feedback, and we're exploring ways to build upon this concept in the future. Maybe there's like a WeWork MLB sort of crossover that can happen.
Depends on the job, right?
Yeah, right.
So companies have been promising flexibility, offering networking opportunities. They've been dropping vaccine requirements to try to lure workers back to the office. Meanwhile, the Seattle Mariners are taking a different tack. They're hosting their first work from the ballpark game this week in an attempt to entice baseball fans away from their desks. It's working, Mike. They sold out of the 150 passes available. It's not that many passes.
It's amazing.
It's the afternoon game against the Chicago White Sox. $50. Fans got Wi-Fi, power access, and a catered lunch at an. Hey, that's not a bad deal. $50?
No.
Isn't that how much like lunch would cost at a ballpark anyway?
Right.
Without beer?
They used to call them businessman special when I was growing up in Philly, those afternoon games. This is taking that to a whole nother level. But, I could see, hey, if you have to entertain a client, maybe show them the PowerPoint presentation in center field. Maybe it's not such a bad idea. Maybe we could do the show from the ballpark one day. What do you
Let's
think?
go to Denver and do it from the Rockies Stadium there, because back in 2018, you're right about this. The Colorado Rockies advertised the business person special. It included food, Wi-Fi, and a spot with a small ledge for a laptop and a standing room only rooftop. That was only $21.
All right, let's get this. Let's make this happen. We got to do the show from the ballpark one day.
Deal. Check out this story and more reporting on returning to the office or returning to the ballpark. You can do that on the Bloomberg terminal and, of course, at Bloomberg.com. You're listening to Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, we made it to the end of the week. The equity market punctuated the last day of trading with a rally. The S&P 500 finished above its 100-day moving average, and the overall market was able to snap a 3-week losing streak. We finished very near session highs with the S&P up about 1.5% today. For the Dow, a gain of nearly 1.2%. NASDAQ Composite picks up more than 2.1%. The Fed's next rate decision is on the 21st, and today we heard from a number of Fed officials making very hawkish remarks. St. Louis Fed Bank President Jim Bullard was saying he's now more supportive of a 75 basis point rate hike. Chicago's Charlie Evans was suggesting he's open to another jumbo move, and then the head of the Kansas City Fed, Esther George, was saying the Fed has a clear-cut case for continuing to remove monetary support. I think it's fair to say that the markets now are expecting another 75 basis point rate hike. We had similar increases, you'll remember, in both June and July. Look at the short end of the U.S. Treasury curve today, a 2-year rising nearly 6 basis points in yield to 3.56%. Very little change on the longer end, a 10-year last quoted at 3.31. Late yesterday, Susquehanna Financial Group reported that chip delivery times shrank in the month of August. Maybe global shortages are beginning to ease a little bit. Today, we had Stifel saying that Advanced Micro Devices is its best bet out of the three majors, the three big U.S. chip manufacturers. AMD today was up by 3.2%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. So how does it sound to maybe, fly to space on a rocket like Blue Origin's rocket, or maybe get up there on Virgin Galactic's and, go tens of thousands of feet into the air, experience some weightlessness?
I got to say, it sounds pretty awesome to me, as a non-billionaire, a member of the non-billionaire class.
You would want to do it.
I think that's something I'd plunk down some money for.
You actually don't need to be a billionaire to experience weightlessness. We got this company, Zero Gravity Corporations, also known as Zero G. We've spoken to the CEO, Matt Goad, a few times over the last year. What they've done is they've modified a Boeing 727-200. It flies up, and it does these sort of like parabolic moves in the sky, and you're able to experience a good portion of weightlessness. They've actually got some colleagues who've actually gotten to do it. Our space reporter here, Lauren Grush, got to do it a few years ago. We're very pleased to be joined now by Matt Goad. He's CEO of Zero G. He joins us on the phone from New York. Matt, how are you? It's good to talk to you.
Hey, great to hear from you guys again. And I was just hearing your earlier segment of getting the back to work segment, and I think we should also be talking to getting back to space here.
Yeah, and, $50 for all you can eat food in space. And,
if you can work from
Wi-Fi.
space, right? I think you might be onto something there.
Hey, Matt.
I'm just thinking about going to one of these games, bringing my laptop, and just plugging in and watching the game on my laptop, and that way at least I get some of the fun commentary.
Maybe you get a better view too as well. Hey, we're talking to you because this Monday, a few lucky STEM students, they're going to actually get to experience zero gravity. Talk to us about this program, because you guys have done this before in the different areas of the world that you've traveled to.
We have, and we have this Monday, a very successful hedge fund participant has basically chartered the plane, and we're going to take up a small group of STEM students and teachers to, again, participate in this unique experience. And the same thing, we did a flight earlier today out of the New York area as well with a STEM student and teacher, and a student who has dreams of going to aerospace, and we let them know that the experience they had is exactly the same thing as how we train astronauts. We had an astronaut training flight a week ago. We have another one coming up in another week. So what you're experiencing on our plane is exactly what astronauts who are going to space are basically getting the chance to feel before they make that trip.
So, Matt, I'm trying to picture this in practice. So you take a Boeing 727, and I guess you rip all the seats out.
But we have 36 seats in the back, but other than that, it's a wide open padded fuselage, and And that's basically the area that you are floating and flying and flipping and doing one-handed push-ups or maybe pinky push-ups and in these environments. And you have, all this room to do it. And, you may run into people, but that's just kind of part of the fun.
If you're watching on YouTube, you can check out some of the video there. You going to do it?
Let's do it. Yeah. I don't know. I think
We could do the program from there. Paul, can we do a remote there? I'm asking our producer, Paul, if we can actually get a remote going.
I might wear a helmet, though. I don't know.
Yeah, well,
you don't need a
You don't need a helmet.
You're not going to get hit by someone doing a cartwheel?
No, it turns out not so much.
Hey, I know you have another question, Mike, but I want to ask Matt. Matt, you're not actually going to space here. 727.
No, we're not. We're actually going below where that Delta flight to say Miami is flying at. We're flying from 22 to 30,000 feet, creating these parabolas, which again looks sort of like a mountain. And as the plane gets to the top of that part is where you start to kind of break free from gravity. And for the next 25 to 30 seconds, you are feeling the exact same thing that you would feel in space. The only difference is that in space, 0G all the time. With us, it's these 15, 20 to 30 second bites of that feeling.
So, Matt, do you get like airline pilots to fly for you? And is this seems like a special skill set that these pilots?
Oh my God! Yes, so they are all former commercial airline captains. So these are guys who have flown left seat of the plane, and they go through an exhaustive training program, starting in the jump seat to make sure they're okay with the experience, and then if they get through there, then they go into the simulator, and if they're okay there, then we actually start putting them in the plane, in the cockpit to see how they do. And it is a challenge to continue to find really good pilots that can do this. I mean, we're fortunate to have 3 extraordinary ones now. We're looking to add others, but it is a real training program. I mean, think of it as basically me putting you in a Formula One car, and your last experience was driving your Mercedes SL to the grocery store.
Well, Toyota for me, Matt, but I get what you're saying.
Hey, Matt, how's the business been doing since we talked to you? We talked to you in May, we talked to you in January. This is discretionary, and it's relatively expensive too. I mean, it's less expensive than going to space. But are you seeing any softness in people willing to shell out $7,500 for this?
So it's $8,200, and by the way, $9,000 starting next year. We also,
Inflation.
Being in the airline, we feel it every single place you can imagine.
Yeah.
So no, the demand is continuing to grow, and not just in that consumer scheduled flight, but like again on Monday, a guy who's done okay in the securities business, made some bucks, basically chartered the plane, donated the money to do it, and we'll put up some STEM students. He'll come up with a couple of his friends, which is nice. But, we're getting people who are just taking the plane for themselves, bringing their friends, their colleagues, their customers, all those things. And then the other thing that's really driving our growth is research. All these things going on with space stations, Mars, Moon, they're looking for an environment. How do they test things that will act in space? And we are the, accessible way to do it, and have been doing this for a long time.
Matt, I assume you don't get a complimentary cocktail and bag of peanuts on this flight. Is that right?
Well, you don't get it's funny you should say that. After you come down, we actually have a champagne reception. And prior to that, on the plane, we do much better than peanuts. We're passing around Fritos, Lay's potato chips. I mean, we're taking it up way better than you're going to get on that Southwest Airlines trip.
I love it. Matt Goad, CEO of Zero Gravity Corporation, also known as Zero G, joining us this afternoon on the phone from New York City. $8,200. Get to experience some weightlessness.
Save up. Well, my daughter's joining the skydiving club at college, which scared the daylights out of me. So maybe I'll talk her into this instead.
Having heart palpitations
thinking
too. About that.
Yeah.
A big thank you to Mike Regan filling in for Carol Master this afternoon. And as always, a big thank you to the entire team here at Bloomberg Business Week. This is Bloomberg Radio.